let's start with what will be two historic Michael Burry tweets. The first one says, the problem with crypto is the leverage. If you don't know how much leverage is in crypto, then you don't know much about crypto, no matter how much you think you know. And then the second says, all hype and speculation is doing is drawing in retail, which means everyday people, before the mother of all crashes. Main Street losses will approach the size of countries. History ain't changed. This is from the guy that called the 2008 housing crisis. He was really early, but he was also really right. And in this case, he will be right too. So, what are some considerations right now? The market is down. You want to buy low. What are some considerations when you decide, you ask yourself, do I want to buy into crypto? Um, the reasons why you might want to. There's heavy inflation right now. We've seen inflation as high as, let's say, 40%. It just depends on the item, but inflation is definitely here. It's happening. It's right in front of us. We can all see it. All you have to do is go to the grocery store and you can see items that are way higher than they were at the beginning of the year. And we know this leads to hyperinflation. Also, there are limited asset classes to put your money into. So when you look at your fiat and you want to convert it into something real, a real asset, there are only so many options. You've got crypto, you've got bullion, you've got real estate, and then you've got income producing business. Basically, it comes down to what retains or returns value. So you'll hear a lot about a hedge against inflation. Crypto is actually not a hedge against inflation because we've just seen we're in a hyperinflated state and crypto just fell. So that's not a hedge. And what's going to happen is because the problem with crypto being a hedge against inflation is it's unstable and it's also based on hype. A lot of the crypto market is hype based, not based in value. So that's the problem with crypto as a hedge against inflation. But bullion, real estate, crypto, there's only so many different places to put your money. Real estate isn't practical for most people. And then also with crypto, you're just not sure what the market's going to do. Bullion is solid, but bullion is also cumbersome. So there's drawbacks to every single one. And then of course with income producing businesses, if we have an economic downturn, how many different businesses are going to be producing income? That's the go-to for Warren Buffett. Warren Buffett tells you, I don't care what happens, gold doesn't matter, silver doesn't matter, he hates crypto, but it's like, where are you putting money? Okay, an income producing business. Well, you tell me when there's a depression, where do you put your money? What businesses are thriving in that situation? What are returning, what businesses are having a return on investment? So there's limited asset classes. So we're going to see a lot of musical chairs with money and deciding where to put fiat currency. Also, of course, uh, crypto has ease of transacting. There's also the ability to have privacy depending on which coins you have. There's both future and present utility. Everybody can see the future use case. Of course, right now, people are using it in the present. I use it in the present for actual transactions, not just speculating and hoping that my money goes up higher. Um, Crypto is decentralized. So it's like you can be your own bank. It's out of the governmental system, which is a yes for a lot of people. And getting back to that use case right now. And there's also asymmetries. If you do want to invest slash speculate into crypto, you have that asymmetric payoff potential. So let's say you invest $5,000. It's entirely feasible that within 2 months you could have $25,000. That is not unheard of. It's actually fairly common if you're investing in the right cryptos and you are within a bull market. Also, right now we have the ability to buy low. Bitcoin is currently at $48,000. Its high was 68.5. So right now you can get a nice discount on Bitcoin, but there are a lot of reasons against the crypto market. One, we are in the midst of societal instability. We have protests happening around the world. We have looting that is happening, open looting. Um, those two things do not bode well for financial markets. Also, the economy is bad. We have rising prices. We have stagnant wages. People are going to lose their home. There will be foreclosures. These are all bad signs. That does not bode well for a thriving crypto market. That does not create a bull market. We have billionaires selling their stock. 2021 was a record for CEOs and insiders of companies selling their stock. Why are these guys selling their stock? Because there's going to be an economic downturn. This could also be a pro for Bitcoin, though, when you think about, okay, well, if they're selling their stock, then they're putting their money somewhere. Maybe they do put it into crypto, but maybe they don't. Maybe they hold it back. Right now, timing is also important. The timing of getting this all done, especially if you think there's another bull run in crypto, which there very well may be, the timing is extremely important into how you do this, when you're in crypto, when you're out, and what assets you convert into. There's also leverage in crypto. So this is what Michael Burry was getting at, and this is what is so problematic is because when you have leverage, you have a system that is built on borrowing, and eventually that borrowing comes back into play. So I've got a graphic here. Let me pull this up real fast. So this is margin trading. So buying on leverage. So let's say you buy into crypto and you buy Bitcoin and Bitcoin's at $50,000. You come in and you put in $5,000 at 10x leverage, and so you're able to get that one Bitcoin. Everything's fine as long as Bitcoin is going up, but when it goes down, you might be forced to sell unless you have the assets necessary to cover. So when you start losing money, the exchange is going to start taking funds out of your account, assets out of your account to make sure that you can cover that loss. And if you can't, your entire funds will be wiped out at whatever selling price. That creates selling pressure. What also creates selling pressure is even the people that are selling at a profit, they're still selling. So let's say you played the game, you played the system, you bought Bitcoin at 50,000, it goes up to 60,000, you decide to sell, you take your profit, but you're still selling. The more leverage traders that do that, again, we still have that downward selling pressure. Let's see. Mother of all crashes, Michael Burry again. There is going to be a devastating crash. It will go down at least 80%. That is. That is my prediction that it will go down 80%. I don't have any hard data on that, but I can tell you that the crypto market is overvalued. When all of these things eventually come into play, everybody is anticipating a large crash. This crash right now that we're going through is not that large crash. This one is what I am thinking is the small one that leads to the big one in 2022. That's my timeline. That's my guess. I don't know what will happen. I am completely guessing, but that is what I have listened to other people, talked to other people, and this is what I'm hearing as a timeline. But we don't know that, right? Anything can happen. Anything can change. That is the current going timeline. But one of the reasons I created this video is because this can all happen at any time. What about Evergrande, right? What about when that one domino falls, where everything just starts? Where you see selling pressure, and then you see this is why the leverage is so big. It'd be different if everybody had just bought into crypto straight up using only money that they had, but that's not the case. So if we start to see selling pressure, it's going to affect the leverage and create a downward spiral. So as I was creating this, I kept coming up with more and more reasons, but I'll end with just these last few. One, the narrative. Crypto is based on narrative. It's always about the next big news. It's always about what is coming around the corner and how does this get even higher. So we've had this $100,000 target, and that's been a driving force for a long, long time. But even that's getting weaker because it didn't happen in November. The prognosticators, and I'm thinking about Plan B, I'm thinking about Willy Woo, they didn't meet their targets. They were wrong. And they had been right for several times in a row, but things are different now. And so this is the hold on 100,000 is getting really, really weak because we're at December 5th. There's only 26 more days for Bitcoin to hit 100,000, and it just went below 50. So the narrative is falling apart. There needs to be something else. Crypto, there when we refer to fundamentals in crypto, there's two different things. The fundamentals of a project could be strong. It could have really good fundamentals. In contrast to, for example, say a meme coin. But the fundamentals of the market, there's no the underlying value to the crypto market is largely future based. So there's not a lot here besides hype, and it will be something big in the future, but it's not big right now. So the narrative is important. The hype is important to keep this market inflated. And I don't see what is happening, especially against everything I've already mentioned. There are so many negative agents in play. I don't see this narrative like there was in the spring when crypto could not do wrong and it just kept going up and up and up. And this gets to my next bullet point. The market is overvalued. There is no nexus to reality. It's all future based. Of course, when governments get in here, we've already seen they're making sweeping changes, and they want to take control, and they're doing it through the health situation. So governments are coming into play. There's market manipulation, whether it comes from independence or the governments, it doesn't matter. It's still happening. That's not helping anything. Also, electricity or lack thereof. We've already seen blackouts being hinted. Diamond hands are not so diamond. We've also seen extreme weather situations. If there's more bad weather, this hasn't been in the headlines lately, but if there's more bad weather, more extreme conditions, more hardships, that hurts the crypto market and all financial markets. And then we've also seen, what are countries buying into? Well, we don't know. I don't know what countries are buying into as far as crypto. And when I say countries, I'm talking about the US, China, Russia, etc. But we see more and more countries, they are stocking up on gold. They are not stocking up on crypto, they are stocking up on gold. And right now we do have FUD. We have fear, uncertainty, and doubt. And so these are all of the market dynamics I see in play. And this is just to inform you, these things are going on. So when you decide to buy into crypto, that's fine. I do think there is another bull run. I think that we will see it pick up. I think we will see it accelerate, and I think we will see a run up. And but we don't know. The thing is we don't know when that will end. The run up, by the way, I think is going to happen after this initial. There will be an initial downturn. This is my speculation. There will be an initial downturn. We've already seen a crash. We might see it go down a little bit lower, and then eventually things will pick up once people are buying into it. But it will all come to a head where at one point we will start to see a large market crash.